Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, August the 12th. Yesterday, all three major indexes closed at record highs for the first time since 1999, meaning all doing it together. Today, however, Wall Street opened slightly lower as tepid economic data weighed on investors' minds, with unexpectedly flat U.S. retail sales growth numbers and a drop in the producer price index for July. This weak data could also discourage the Federal Reserve from raising interest rates this year. Traders are pricing in a 41.6% rate of a hike in December. That's down a little bit from 45% earlier this week. Okay, with all that to chew on, let's go on to our three charts that could give us an insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of our trusty S&P 500 SPDR, symbol SPY. Excuse me, as you all know, this is the ETF that closely follows our benchmark index. We look at it because it shows volume on it, and it is a tradable. You can trade this. Okay, when I captured this chart this morning, the SPY was trading at $218.33. We can see, I hope you can see that yesterday, the SPY made an all-time closing high of $218.94, which is about approximately $21.89 on the S&P 500 itself. Now, we've been consolidating almost all the way through the month of July with a little tiny dip here toward the end of July, and now the market's consolidating again. And it looks like it's doing so at least into this mid part of August. July and August are typically what we call the summer doldrums. We usually have very light volume during this time of the year because so many people are on vacation. However, you need to know that August can get a little ferocious in the middle of it. That's sometimes the way it goes. So we don't want to go to sleep here with our positions. We don't want to think everything's rosy and we can just leave them alone, perhaps not put protective stops on them, because again, August can get ornery about this time and has so for several years. So let's be wise about what we've got going on. At any rate, right now the SPY is trading above its red line, the 20-day simple moving average, above its green line, the 50-day. Both of these are rising, that's positive, and above the 200-day moving average. The RSI here, the 14-day RSI down on the middle scale, it is not, if we see a slight negative here, it's because the RSI here, it's not quite overbought. If it were trading above 70, it would be overbought. The RSI here, though, has not really moved up with the SPY's move up here above this prior high of about 217. It hasn't moved up with that. We could call that a very, very slight bearish divergence if we wanted to. I'm not going to say that's anything to worry about, though. The MACD, the moving average convergence divergence oscillator, is moving totally horizontally above the zero line. As long as the black MACD line and the red signal line are above the zero line for the MACD, that's positive. Right now they're moving together totally sideways or horizontally, so not much to talk about there either. What we need here for the SPY or the S&P 500 to move higher is we need good news. Sometimes when markets get like this, and actually it is toppy, and when it gets like this, now that we're through earnings season, we need more good news. Bad news sometimes can cause profit taking, and it would be perfectly normal for the market to pull back here a little bit anyway. So we'll have to see. Of course, there's certainly a possibility the SPY could move above 219 and move to more all-time highs. That's certainly possible. Either scenario, of course, can happen. So let's remain aware. As we move into our next chart, we're going to look today at the iShares Russell 2000 ETF, as we many times do, especially when we're really focusing on the market's next move. The Russell 2000 index is an index of small cap stocks, most of them based in the United States, and most of them do not sell overseas. So they're really, we can say it's really more or less a domestic index. Now the IWM is notable, or the Russell 2000, but in this case this is the ETF that follows it. The IWM is notable for acting like a leading indicator in the market. We can say as long as the IWM is healthy, and as it is right now, as long as the IWM is healthy and looking good, then that's a good news indicator for the rest of the markets. If the IWM starts to fall, many times we can use that as a, hey, we better pay attention, because that can pressure the S&P 500 lower. So as I captured this chart this morning, the IWM was trading at $122.08. It's hanging out right here near its relative highs. It's hanging out at $122. It's sitting on top of these July highs of 120, and if we could look back, which I didn't capture on this chart, to the November highs in 2015, we would see that those November highs for the IWM also come in at 120. So right now the IWM is sitting on that support. This is support right here. It's sitting on price support, sitting on the 20-day moving average at these levels at 122. Now, if for any reason we get bad news coming into the market, for example, next week, and the IWM starts to fall, then I'm going to very closely be watching the 119 level, and then on down to, if we look here, what was resistance is now acting as support down to the 118 level. So 119, 118, and of course that's where the 50-day moving average is coming in at right about 117. So this whole zone here could act as potential price support and indicator support for the IWM should it decide to take a summer rest. After that, of course, we can see levels down to and support down to 115 and so forth. I think the main objective here is I know what I do is I do keep an eye on the IWM all day. If it starts to break down, and I hope it doesn't, but if it does, then that will be a warning to me that the broader market could get pressured by that action. And again, of course, the IWM could take off and head up to 123. We don't know. Right now, it's just moving sideways lethargically through the month of August. Our next chart here is something we haven't looked at in a while. This is the PowerShares Media Portfolio Exchange Traded Fund, symbol PBS. The PBS right now at this time of the year has very low volume, but now that Disney's earnings are out, it's something I want to pay attention to. Want to get through that. The media ETF here, the top components are Yahoo, Google, or I guess we call it Alphabet now, Time Warner, Facebook, Disney, CBS, big media companies like that. And it seems to me with the pretty volatile elections we have going on are going to keep a lot of people paying attention to their media outlets, whatever that looks like. So I'm thinking that the media stocks may do well into the end of the year, assuming we don't have a drawback of any substance. So I'm looking at the PBS here. Again, it doesn't have much volume right now, so you can't day trade it in any way. It's something you would buy, put in a stop, use more as a core trade or investment. And by the way, let me just put in here as a quick sidebar, What you can also do is go in and look at the holdings of the PowerShares media portfolio. I just mentioned some of them. If you want a little more action, you can go into these holdings and scan through the stocks and see if there are any that appeal to you. Sometimes I'll do that. I'll use a combination of a position in the ETF itself, and then if I want something that moves a little faster, because of course the ETF is diversified and won't move as fast, I want something that moves a little faster, I'll go in and look at the individual components and see if there's anything attractive there. I myself have been keeping an eye on Disney, and I know earnings just came out. So back to our chart here, the media ETF here, as I captured this chart, is trading at $25.54. Right now moving above its 20-day simple moving average, the red line. Sitting atop its 50-day moving average and its 200-day moving average. Now we can see this pattern that's been playing out here with PBS. This can be called an inverse head and shoulders when and if price moves back up and moves above this $25.80 price resistance range. If PBS can manage to do that, that's something, it could make it something that I would be interested in, make it an opportunity here. I'm using, as I always do, the 50-day moving average as a make or break zone. If it moves below $25, for example, I won't be interested in it anymore. But if it can stay above this 50-day simple moving average and head up into the 26 zone, it's something that will definitely be an opportunity to me, as long as the market stays in a happy place right here. So check out the PBS. It may be something you're interested in the future. And now we'll go on to next week's or the coming week's economic reports. But please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and by the way, right now our mini trading lessons are centered on swing trading. So we're having a lot of fun with that and learning a lot. I'll also give you stocks and exchange traded funds that may be ripe for high potential trades. This is a low priced, high value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available a few minutes after the session ends. And now for the coming week's economic reports, we are moving into the tail end of earnings season, so those are going to lighten up. On Monday for economic reports, we have the Empire Manufacturing. Tuesday, we have housing starts, building permits, and the CPI, or Consumer Price Index. Wednesday, we have crude inventories in the FOMC minutes. Thursday, we have jobless claims, the Philly Fed, and nat gas inventories. And Friday, there's not much going on in the economic report area. Join us for Toni's Market Club this coming Monday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.